Hi, again, welcome to this presentation. I am Walter Cameron Mallow. I am the co-founder and lead consultant for the Pacific Forensic Accountants. In this presentation, I will be talking about money laundering and proceeds of crime. Now, this presentation is basically focused on the Solomon Islands money laundering laws. Format and the presentation based on this Solomon Island law on money laundering and proceeds of crime is basically similar to other jurisdictions. And as a traveling alumni of the UK, and after having studied the UK money laundering and proceeds of crime 2003 and 2007 version, these laws actually basically same. The way the global money laundering and proceeds of crime are written across the globe, they are kind of similar in nature. There is no significant difference in the way they define the definitions and the technical terms as well as the application of the law. Of course, there are other jurisdictions, they tailor it to suit the context, but otherwise most of the presentations, they are kind of similar in nature. So my presentation on this law on Solomon Islands, it's similar to everything that's been written in other jurisdictions. Sorry, not everything, but quite similar in the content. So this presentation is, although it's focused on the Solomon Islands context, but it can be broadly extended to the way and how other jurisdictions wrote their money laundering and proceeds of crime laws. So first of all, this global or this word they call money laundering. Money laundering is kind of a tricky, but let's see the way we do our weekend launderings of our clothes. So during the weekend we throw our dirty clothes into the washing machine. It is because dirty clothes are thrown into the washing machine for cleansing. Yeah, it is similar in nature. So take for example, I've said an example of our dirty clothes put into a machine and then the machine will clean it. Money laundering is just the same process where dirty money is thrown into the washing machine or thrown into the financial institutions, our commercial banks and our banking system, or through our company laws or the existence of trust and so forth. So use of the dirty money into these washing machines or into these financial institutions and commercial law just to make that money laundering appear to be clean. So that's basically the definition of money laundering. So money laundering is the process of taking dirty money and making it criminal activities related to organized criminal groups. It's basically involved Interpol. So Interpol is basically the collaboration of global, or in some context we can minimize it to regional Interpol intelligence gathering. Based on this intel gathering can able to collaborate and share information within certain jurisdictions. Because of this, we can group them into the global scene as well as the regional scene, where Interpol can work through the collaboration of law or through the collaboration of memorandum of understanding. Actually, financial criminal activities are handled within this group of settings. So in a way, one jurisdiction is not or is unable to fight financial crime on its own. And because financial crimes are basically cross borders, because of the functions of these criminal activities across borders, collaboration and these agreements of memorandum of understanding, we should say, within Interpol, it can be able to minimize these activities of the concentration of the global money laundering is to concentrate on the resources. The concentration on most of the global investigative labs or investigative financial intelligence unit, they basically focus their resources on three aspects. So the first aspect is identifying, second is tracing, and the final is seizing. What is important for the resources to be geared towards identifying is where financial intelligence unit or a unit responsible for proceeds of crime and money laundering is to firstly identify. Now, if a jurisdiction or a financial institution cannot be able to identify, then there is actually no way that they will going to trace as well as seize properties that are actually caught within these proceeds of crime and financial investigation. So these three basic things, identify and tracing and seizing, they are the primary or the priority of all jurisdictions that are concerned money laundering as well as proceeds of crime to address their resources, even if their resources are scarce or even if they are too small for smaller jurisdictions. So these are the things that basically allows for the collaboration as well as the commonality between these financial institutions, financial intelligence institutions. Now, before we actually talk about some sections on this some relevant context in terms of money proceed, I really wanted to talk about money laundering in a practical way, but in a different and varying forms that have been conducted globally by some people in certain regions. So if we look at Hawala, for example, so Hawala is a dialect of the Hindu speaking countries or individuals. Hawala is actually referred to Arabic word for being transferred. So as we can see that Hawala in Arabic means transfer. It is a system of remittance that has existed for hundreds of years between the Indians in the main India as well as the Indians who actually migrated out of India. So this Hawala process actually existed between these people who actually migrated out from India, and so they use the Hawala process of transfer funds in and out of India based on this system of remittance. So the system actually functioned within a bank called Bank of Hindustan, and it's actually found in Calcutta in 1770. In those days, this bank actually was unregulated, but it's actually functions across borders. In some jurisdictions, the practice of Hawala is actually a legal form of ways to transfer funds between businesses as well as individuals who are living cross-border. But in others, this practice of Hawala is actually illegal. So let's demonstrate. I saw the demonstration of how Hawala actually exists. So Hawala actually is, as we said, is a process of transferring money from point A to point B globally. So if, for example, if we take an Indian student by the name of Malau, M-A-U, and he is a student but is located in Fiji and is actually studying in Fiji, and he wants to transfer money home to his father in Punjab in India. On this background, he's actually living on an expired visa in Fiji, but while also working, so in an illegal way. So because he has not opened a bank account as well as a Western Union for the purpose of sending money because of the facts surrounding his visa being expired. So he actually approached Paila, another operator of Hawala in the central. So when Malau approached Paila for the Hawala as a banker, so it was agreed that Paila as a Hawalada or the banker of a Hawala will be able to transmit these funds back to India based on what Malau instruct Paila to do as a Hawala based in Fiji. So after Paila received the funds as a text from Malau, he actually sent a text to his counterpart or another operator of Hawala in India. So if Himuli lives in India, for example, with Hawala operator, Paila will actually text Himuli in India with a payment instruction to ensure that Malau's Papa will receive these funds, and Paila will also issue a 8-digit code. So actually, Hemuli will give the code to Papa or Paila's Malau's Papa. So Paila gives the digit code to Malau, also who takes it to his father. So while Malau in Suva takes the 8 digit to his father in India for the receipt of the funds, between Hemuli between Hemuli and Paila, they also exchange the 8 digit. So when the two Hawalanders or the operators of Hawala actually made notes in their record books about this transfer of funds that have been received in Fiji. So we have the operator in Fiji will keep the money while the Hawala operator in India will issue an equivalent Fiji dollar in rupees. At the end, some balances will actually be struck off from their book of records. In some instances, Hemuli from Fiji will actually import timber from Paila. So when this import takes place, for example, there will be likely a chance where they will have to balance the books based on the funds being given out from the other side in India, and as well as the funds that have been received here in Suva. So that's basically the way this Hawala is actually operates. So to sum up, the Hawala actually is not actual transfer of goods or transfer of cars from cross-border. It's actually one end of the transaction appear to receive something, then on the other hand, the same operator will also issue an equivalent balance of services or balance of currency or goods, for example. So in this case, these two will balance their book based on material or based on currency exchange. So that's actually happening in Hawala. So at the end of the day, there is no money actually transacted through the banking system, but between them they exchange just messages, but between themselves they know what actually been recorded as incoming revenue, and on the other side is the paying out expenditure. So by the activities of imports and exports, etc., strike a certain deal where they actually balance the books. So that's basically what Hawala is all about. But in some jurisdictions, we learn in circumstances where, customs officers, for example, they come to terms with a huge container of imports where the actual content of that imports into that container was not actually equivalent or is not near or close to the balance of the TT or the remittance they actually remitted overseas to pay for the goods. So highly chances that these sort of activities actually happen in some form with Chinese, for example, or with other regions around the world, where probably suppliers, supplier to supplier agreements, for example. So here we have incidences where, as I said, in terms of the customs of entry of certain imports goods value that are deemed or seem to be undervalued as a result of comparison to actual remittance overseas for the acquisition or payment of such value. So it's kind of happening, but in a different way for some other regions around the globe. So what is really important is to ensure that there is a proper reconciliation of the books as well as proper reconciliation of the quantity of what actually been imported and as well as what have been remitted out in terms of the currency. So what I've just explained as well as the Hawala, these two are two examples of what I've just discussed in terms of the likelihood of some scenarios where proceeds of crime as well as money laundering can be committed in such incidences of such arrangements. So let's go to what does the law says in terms of what we explain in terms of the suggestion of this Chinese undervalue of customs goods, or what money laundering in terms of the practice in comparison to what the law says. So in Solomon Islands, the law on money laundering and proceeds of crime act was actually enacted in 2002, and minor amendment was done in 2004, and then a huge, significant portion of the 2002 Act was actually amended in 2010. Most of the content of the laws that I've been using will actually based on the 2010 amendment. So, who does the law intends to to address, or who does the law intends? So, these are the people who are actually involved in terms of what the law intends to target in terms of their jurisdiction. So, people who are actually involved in criminal activities or financial crimes. These are the people whom the law deemed to be that intends to address or target. So the criminals. So why is it the criminals are involved? Because criminals can be seen as a means of transfer funds between themselves, probably for drug, transnational crime, money laundering, proceeds of crime, also for terrorism, for example, or for other activities of business that are and communal to the way common societies live and behave. Others involved are also solicitors. So, of course, solicitors, we can see them as provide legal clerical work for businesses, for example, registering as well as drafting of contracts between entities and companies and multinational companies and all this clerical legal works. This law is aiming to address these sectors too, because not all solicitors are actually handle or operate within the law. So that's why this law is also look at solicitors as part of what it intends to address. And also, as we can see, accountants can also function as the solicitors do, because they prepare books, they look at the cause of the investors or the criminals, or that the investors who intended to do things that are actually not within the spirit of the proceeds of crime and money laundering laws, and as well as the investors. Sometimes the investors deem or seem to be criminals as well. So because of their nature, transferring funds across jurisdictions, maybe for good or for bad, so they are also part of this intends to address. Also, we have banks. Banks are important player, or commercial banks and financial institutions. They are also a common player within these laws, because most of the funds that are electronically and have been transferred between us globally from one country to another, they are actually made possible through the financial systems. So financial systems, we can look at the commercial bank, can look at the Reserve Bank, and we can look at, for instance, Western Union equivalent operations. So these are another set of groupings under the financial institutions. And lastly, another very, very high risk, the people who trade in real estate, as well as those who are trading in diamonds and gold. So these are all high risk entities or high risk businesses, which the law actually look at them as very high risk in terms of functions and the operations. They have the potential to actually be part of suspected culprits of money laundering. This law actually intends to regulate sectors such as the financial institutions, so all of our banks, as well as the legal practitioners. So legal practitioners, as I have mentioned, so it includes solicitors, and because of the broad definition of the law to include the legal practitioners, it is now covering the another arm of the legal fraternity, which is the barrister. And also it covers the cash dealers. So what is it they mean by cash dealers? So we will actually look at the definition under Section 2 of the Proceeds Act, just to have a look at what is it that cash dealers actually involve. So in the Section 2 of the Act, it's actually broadly defines cash dealers to include casino activities or gambling house, And it's also include lottery operators, including person who carries on such person through the internet. So lottery operators and as well as the people who carry such activity either physically or through the internet. So it actually covers through these two parties as lottery operator. And of course, cash dealer is also seen to be defined as the real estate and as well as dealer in precious metals and as well as dealer in precious stones and as well as accountants, trust or a company service provider. So law intends to regulate these sectors. So these are the sectors. So if we look at cash dealers actually defined to be all these sectors within the business community. So it's actually a long definition that covers a lot of players within the economy. But that's basically what it defines cash dealers. So the proceeds of crime, just to understand what it means by proceeds of crime, it's actually defined under section 2. So we will actually go into section 2 to look at the definition of what actually proceeds of crime means: any property or economic advantage derived or realized directly or indirectly as a result of or in connection with the commission of offensive, irrespective of the identity of the offender and irrespective of whether committed before or after the commencement of this act, and includes on proportional basis property into which any property derived or realized directly or indirectly from the offense was later successively converted, transformed, or intermingled, as well as income, capital, or economic gains derived or realized directly or indirectly from such property at any time. What is important is to understand what does it mean by property. So here the property actually defined in 3 stages. So one is property, it means currency. Property can also be mean kind of asset, whether corporeal or incorporeal, movable or immovable, tangible or intangible, whether situated in Solomon Islands or in another country, including any legal document or instrument, including electronic or digital, evidencing title or legal equitable interest in such assets. So this is another broad definition of what it means by property. So it's something that you can touch, it's something that you own, or it's something that you own but you cannot touch. Example, goodwill, example, corporate brands. And property also includes bank credit, travelers, bank check, money order, shares in a company, securities in a company, bond with the government, for example, bank draft, letter of credit, or other similar property. They are deemed to be property, and either it's situated here in salt or in another country, including any legal or equitable interests in any such property. So what it means by proceed of crime is when you actually in connection of commission of an offense irrespective of the identity of the offender and irrespective. So it really doesn't matter whether you are offender irrespective of whether committed before or after this date. So that's what it means by the proceeds of crime, which defined as the property. But then when they define property actually defined with one of subsection 8, which is currency. So what does it mean by currency? Currency is actually the coin and paper money of Solomon Islands, or for that country or another country that is designated as legal tender and which is customarily used and accepted as a medium of exchange in Solomon Islands or the country of the sea. Or it can be a precious metal or precious stone or pearls or jewelry. That's what it means by currency, or currency in electronic form. So it can be, for example, funds that is stored as a Bitcoin, and that Bitcoin was bought out of the funds that you actually had in your account. So that's actually a currency as far as the law defines. So the whole thing, the property which is defined here, including the currency, it can be an offense when it will be later or successively converted or transformed or intermingled as well as income, capital, or other economic activities. So when it's converted, remember we defined money laundering as a way where dirty money actually went into the washing machine or the financial institutions. Then later it will come back to us into the community, assuming that the money was clean. So here, later, it's successively converted. So this whole definitions of property, currency, and cash dealer, they actually converted. So when it's converted to be a property later, when it comes out from the financial institution and buy of properties, for example, buy of cars, buy of lands, for example, buy of farm, etc., buy of a ship or vessel. So these are example of converted or transformed into a company share, or intermingle, or actually use it to to buy part of a certain business in order that can be deemed as an income capital. So these are the things that this thing become an offense when it actually become, or later become, converted or transformed. So if we can look at the examples, if you have already looked at examples that I have talked about, where public servants, or in the case of the African cases of money laundering, or the Chinese, where the funds have been converted, which have been laundered out from China and bought properties out from Hong Kong, as well as the US, for example. So these are the type of situations where tracking, as well as seizing, as well as identifying, are so important, so that we can easily get into contact with the way the offenses have been committed. That's about this definition of property and definition of proceeds of crime, as well as the currency, which I've decided to put into the Word doc for the purpose of explanation. Another proceeds of crime, aside property, is economic advantage. So economic advantage is actually part of the property as a definition of proceeds of crime. So economic advantage is when situation of the person who actually commit the offense of financial criminal activity gain economically, or had an advantage over the rest or others as a result of what he or she did, the legal entity did, and the result is an economic advantage on your result. That is basically economic advantage. So once you commit that offense, and also it becomes a gain in you defined as economic advantage, then that will be part of the proceeds of crime. If we go to crime, or the offense under the proceeds of crime, it is when you converted property, so out of the dirty money that have been pushed through our financial institutions, or through the internet, or through money agents like Western Union, for example, when that money have been converted into a property, or when that property have been transferred, or when you conceal those funds and those properties and currencies for the purpose of future gaining a property in another form, probably in another jurisdiction, based on the examples that I've already put out earlier on. You disguise those funds for the purpose of acquiring property, or you possesses those funds for the purpose of acquiring property, or you possess those property for the purpose of buying any property, or you uses those funds, or those funds that have been coming out from the financial system, or from dirty funds, for the purpose of using that to gain into any property. So see, it's very, very wide the way that it defines what it means by the proceeds of crime when it comes to offenses. So these are the offenses that are said to be committed by fraudsters or financial criminals when it comes to what it means by offense under the Section 17 of the Proceeds Act. 17.4, it says a person who attempts. So even if you attempt, you are not doing things directly. If you attempt, you are actually part of the definition of your contribution, or your attempt to help. So attempt is also a crime, as also if you are facilitating, or if you are aiding or abetting, or if you conspire. So So if you provide an advice through legal means or through accounting means, for example, or if you procure or you incite any other person in order to be successfully launder money into the financial systems or into the commercial banks, it's actually part of what the offense says in terms of the proceeds of crime. Also, another offense is section 18(1) and 3. So in one, if you provided a false name to the financial institutions, you are also committed an offense under the proceeds of crime. If there is a non-compliance by cash dealers or financial institutions, or if the suspicious transaction reports that have been reported by the commercial banks to the financial institutions, if these reports are leaked, it is also an offense. So the person who actually leaked the reports will able to commit a crime under the offense. So again, section 17 lists the offense under the pursuits of crime. So these are the offense. If you if you use the funds, the dirty funds that have been coming out from the financial institution for the sake of converting property, transfer property, conceals property, disguise property, acquires property, and possesses any property and uses any property. These are the short form of definitions in the pursuits of crime. So based on this, we'll actually look at the avoidance. What can dealers, cash dealer or legal practitioners can be, or the financial institutions can able to do in order in order for them to avoid being committing into this financial this offense under the pursuits of crime. So here, what is important is the account opening of customers, whether it's legal entity, the individuals that actually open an account with the section 12. So any person who actually, or any legal entity who actually open an account with the financial institutions, they have to able to verify. Their documents have to be verified. The verification of their account opening documents are important. Also under section 12, verify identity to conduct transactions. So whoever that comes into the financial institutions or the commercial banks to conduct their transactions, the person must also ID verify. And also account opening, the person who opens the account must be account verified. To actually transfer funds out from that account to another account, or funds transfer must be also customer ID. So these are the things that if you comply, like you avoid caught up with the Proceeds of Crime Act. So in order to avoid these offenses, the compliance is to actually provide IDs during account opening, provide IDs during instructions of transactions, provide ID during transfer of funds. So these are requirements under section 12A. And in B, always the financial institutions or the cash dealers or the legal practitioners, they should report matters to the financial institutions if they see that dealing with suspicious money launderers where the transactions that they have confronted or faced with become unusual or suspicious. So what it means by unusual or suspicious, it depends on the legal definition of these two. But it's actually when the normal circumstances of probably the business nature or probably the threshold of the deposits probably behavior, the human behavior of the customer who actually depositing the funds, or it's actually level of the deposits, actually mixture of domestic and foreign currencies. So it depends on what the definition of unusual and suspicious. But these are the guidelines of Section 12B that in order to avoid being caught under money laundering and proceeds of crime, when you see something that is unusual, out of context, or it's actually not normal, then a suspicious transaction or a report to the financial institutions can be done to avoid being caught under the offense of proceeds of crime. So this is 12B. We've looked at 12A. 12C is the identification. We can avoid by a robust method of identifying individuals. So when we talk about individuals, when an individual walks into a financial system to open a bank account, for example, we need a lot of questions to ask. For example, what occupation you occupy, where are you living, where are you working, what is your full name, and also the bank or the financial system will also require that customers to provide IDs, for example. So IDs can be a driver's or can be birth certificate, can be passport. So these are the things that financial institutions have to avoid and able to comply with the proceeds of crime by asking this information entirely from an individual. So on the legal entity, the companies, I should say, customer's name, legal form, is it a partnership, liability company, or is it a trustee? What is the company's name, or what is the customer's name? What is the directors? Who are the directors involved? Who are the shareholders? So these are the questions where the financial institution would like to ask so that they can be avoided in terms of proceeds of crime offenses. So you can also be able to look at a legal entity and also document the beneficiaries, principal owners, and the control structure, and provisions of regulating the power to bind the entity, the authorization of any person purporting to act on behalf of the customer, and identify the person. These are the things to avoid being caught in the future by thoroughly asking or verifying with the legal entity as well as the individual through the cash dealers of this entire requirements of 12C. So 12C is actually, or is basically about identification details. This is 12C, so the purpose and intended nature of the business, what is the business going to do? Because as a document, if the business is all about selling gold, or for example, or if they are buying and selling fish, you can able to estimate the type of income that will be received based on projections and planning documents of the entire legal entity. So this is why it is important that compliance to 12C is also part of asking what is it they are operating for, because we really wanted to avoid dirty funds being washed through the financial systems and then deemed to be fairly good money, which is after all not good. So also 12C, there is a need to risk management of PEPs. PEPs are politically exposed person. Politically exposed person, we need to find out where is the source of the property. Remember, we have already defined the definition of property, and also to open a bank account of politically expressed person, a senior manager of the financial institutions need to do a approval before the funds have been or before the accounts have been opened. What is important is in this provision is because when the future internal audit or money laundering oversight committee or companies, when they do the verification of the processes of onboarding, for example, they will have to look for either the source of funds that are actually going into the politically exposed persons actually defined as they were during the account opening stage. Also, identification details will also look at the conduct, regular and ongoing enhanced monitoring of the business as well as the customers. Let's look at the definition of, the politically exposed person. We will cover that later in terms of its definition and its cover. So again, in terms of avoidance, no property IDs amount to STR file with the Financial Intelligence Unit. In this section, it actually allows us to automatically file a suspicious transaction report to the financial intelligence if no IDs have been provided for a suspicious transfer of funds, opening of any document or any accounts. So on the grounds of the lack of providing of any ID, it's an automatic filing of a suspicious transaction to financial intelligence unit. And also due diligence and monitoring transactions under section 12I, if we want to monitor all the performance of the high-risk customers, politically exposed customers, as well as the accounts to avoid them committing money laundering, we have to do it on a continuous basis. we have to do it and ask questions as when transactions have been presented to financial institutions with suspicious threshold, for example, and also the continuous risk profile, business, and also document of source of funds. So in these requirements under Section 12F and I, it actually requires compliance of transactions as well as risk profiling, source of funds, and cross-border activities must be presented to the financial intelligence unit as and when they are required. So in terms of Section 12J, it also forbids, as I've already discussed, that if one opens an account with false name, that is definitely an offense under the money laundering law. So cash dealers or commercial banks, they avoid these by actually asking a lot of questions when one opens an account, just to make sure that they are not caught under the offense of the pursuits of crime. Under avoidance, Section 14 and 14A, 14B is to report suspicious transaction. So this is what I've discussed. Like when a situation exists to present a suspicious transaction, it has to be done. Report terrorist organizations, financial institutions, report transactions with no legitimate purpose. When the transaction becomes so complex that you really can tell whether it has a sense in it, that is a complex, or it's unusual, which I've already covered, or if it's too large and does not have any apparent or visible economic or lawful purpose. Useful pattern of transaction does not have any apparent or visible economy or lawful purpose. So when these things actually happen, the cash dealer or the financial institutions has to file a suspicious transaction just within 2 working days. Section 14D, it actually covered electronic or other transfer reports. So when submitting a suspicious transaction, it has to be done by electronic and as well as other transfer report. And this also need to be done within 2 working days. We've covered almost everything on a very general way. So here, when we mean by customer due diligence, like the banks or the commercial banks or the cash dealers, they really need to know the KYC or know your customer. So when a lot of questions ask about your address, where you're working, as well as how much you're earning, and the potential earning and the potential growth of your business, the prediction of income and so forth, these are what it means by KYC. So identity checks, all the IDs that we have discussed, all the business matters, source of funds and use of funds. These are the things that are caught under the due diligence. Now, in all of these cash dealers or financial institutions or commercial banks, they recruited somebody that they call money laundering reporting officer. So money laundering reporting officer actually investigates and also does the report and completes the report and files it with the financial intelligence unit. So these are the people, responsible officers that are recruited within these cash dealers or the financial institutions. So these are the kind of focal point between these dealers or the commercial banks as well as the financial intelligence unit. Most of these organizations that I have mentioned, especially the multinationals, they actually have this position within their settings, the money laundering office. The internal control of these cash dealers and the commercial banks, they has to be robust in order to comply with these internal money laundering procedures and also to give a robust policy on cash receipts, on when they should raise cash receipts, as well as the accounts policy, when is it appropriate for them to raise suspicious reporting when accounts policy have been breached or cash receipts have been breached. And also the training has to be ongoing in terms of the way these commercial financial institutions as well as the cash dealers engage with fine liners in terms of accepting customers or dealing with customers on a frontline basis. So training has to be done for the frontline staff. Risk assessment is also another component. Every business that I've been mentioned under the cash dealers as well as the financial institutions as well as network business, risk assessment has to be conducted on the clients and the businesses who committed business with these entities. So risk assessment should continue in terms of profiling of clients and profiling of the business, and risk assess whether the business actually changes or whether the market place have changed. So these are the things that you need. These dealers have to comply in order to ensure they understand their customers well by risk assessing and continuous risk assessment. So I've said I will give you the definition of politically expressed person. So in this jurisdiction, it is defined under section 2, which says that entrusted with a permanent public function in Solomon Islands or any other country. So entrusted with permanent public function. In this case, it also can be seen as the head of state, head of government, or it can be the minister, can be a judge, can be, not can be, they are judge, they are legislator, head of government department, so can say director of our departments in the province, or secretaries and the permanent secretaries. We can call the head of departments within the statutory bodies, as well as the CEO, as well as the blood relative to this group. So this is what is deemed to be the definition of exposed persons. So when we talk about risk management and due diligence, as soon as this customer due diligence have been spotted, that this customer or this business actually has a shareholder or a director of this customer is politically exposed person's definition, then the risk of keeping the account has to be set to a certain risk level where continuous assessment as well as monitoring can be conducted when it's covered under this definition. Lastly, the political expressed persons must be, before onboarding, get an approval from someone senior within the cash dealer as well as the financial institution, as well as establish the source of property which this politically expressed person have, and as well as the ongoing monitoring which I've discussed. So, yeah, that's it. Thank you so much.